Ding ding. The day is done. All right, well, we didn't quite get 42.75. Who wins, Dork? Me or you? We're closer to 42.75. I don't know. Let's call it a draw. Yeah. Well, 42.70's out of the money, too. I think, yeah, we're both winners, right? They didn't get their Vega risk out of the money, so everyone wins. All right, so yeah, we kind of trended down along the descending megaphone deal that we got going on here. Obviously, tomorrow the bearish range is going to shift lower. We're still looking at 43.15 as kind of the break point for any bullish price action. So we would need a very sharp bounce at this point. Delta's picking up on the JPM long puts, which are here at 42.10, as is the Vega hedge for those as volatility rises. VIX moving back into some normalization here at close with the contract in front at 19.175 and spot VIX at 1909. Obviously, a break down from here is very, like a break of this trend when and if it happens is very likely to lead to a test of the long puts. A test of the long puts is probably going to see us move down very sharply, especially if it happens before the end of this week. If we can stay above the long puts into Friday, the deleveraging of the charm on those can drive prices up. So keep an eye on that. I know we have a JPOW speech, I believe Thursday after market close. So that might be a good time for bulls to try to pull back some of their positioning if VIX hasn't slipped so far out of their control that they can't at that point. Although I don't think even if they pull anything back, it's probably just going to be to de-risk. I think the continuation of this price action is very likely over the next couple of months. The equal weighted index down 141 points today. NQ down 150. So tech's really gonna start getting hammered more by those rising yields than really anything else. The correction in tech could be fairly extreme. Dixie closing the day at 106.17. So really confirming that level above March's high and, sort of heading towards November's highs around 107.25 will be the next really important level there. USD JPY closing the day at 149. Well, not it trades 24 hours, but 149. Broad commodities dropping a bit today. Correlation picking up pretty significantly, although I'm pretty sure it closed lower than its high of the day. But yeah, correlation moving up. So more of that volatility flowing into indexes and out of equities. Tesla's super exposed to that correlation trade. So is Meta. And we didn't really see a lot of movement in those, right? And then, yeah, yields substantially higher yet again. Not as big of a move as yesterday, but still a pretty decent one with the 20 and 30 both up almost 80 BPS and the 10-year up 30 BPS. Even the shorter dated treasuries are seeing some positive price improvement today. Now the 6-month projection targeting a Fed rate increase and the 2-year projection targeting a hold at a federal funds rate of 5.1%. Lastly, the vol curve and bond curve are really tightening up today. This is actually higher at one point, but they're starting to collapse, and you're starting to see, as more interest in bonds picks up, you're going to see more of that convexity hedging that can drive volatility higher and higher. And the USD JPY synthetic swap still just rocketing. I think we're very likely to see a continuation of this price action. We lost some pretty important levels today at 43.25, 4,300, 43.75. Regaining those back is still of paramount importance to underwater short put positions, and we will see if they are able to. But keep that in mind. Make sure that you're carrying some sort of, at least small out of the money hedge if you're carrying, especially if you're carrying in the money put positions. Thank you guys so much for tuning in. I'll have more in my write up tonight. I appreciate it. Congratulations to all of you that picked up some profits today. For the rest of you, there's always tomorrow. Have a good night, guys. Later.